Morning all. How are we all doing? Morning Stevie. Morning David. Morning Berlino. Guess that is. Morning Dwee. Morning Diamond. How are we all doing? Who got an oil? Out of oil now. Bank that. It's a good trade that. Morning Virginia. David. Made it to a London stream. Let's go. Asking for a clean ORB. Fingers crossed. Hopefully we get a clean ORB today. Morning Potgaiter. Morning Rob. How are we all doing? So, good news. Morning Joaquin. I managed to get the Jigsaw working yesterday. Had to contact Jigsaw support. So Jigsaw is now up and running. There we go. So that's Jigsaw. Bad news is this prop firm doesn't supply level 2 data. So we've got the charts, no problem. We've got the ladder. We've got all of the time and sales data. But the big bit in the middle is black because we haven't got level 2 data. So I've got to basically try and get a level 2 data supplier today, which is going to cost another $40 odds. So I'll have to do that at some point. But anyway, so yeah, not too bad. At least it's up and running so I can start trading on Jigsaw now for futures. That'll be this afternoon in New York. I'll be working on that this morning. So let's have a look at what's going on in the market. Let me just shut Jigsaw down, actually, one sec, because there's no point in having that open. Get rid of that. There we go. Move chat over there. Put that over there. Where's the London string? There it is. And I need my pen. Where's it gone today? Hide and seek with a pen every morning. There we are. Right. So, morning Eric, morning Rahul, morning Danny. The EA got me out of oil a little sooner than I wanted. Operator error, but it was indeed a good trade. Cool. Yeah, it's a good one. Oil. So I just got out of it this morning here. So the wrong one. The entry was the entry I took was on a break of that propulsion gap. So I got in here. And I'm out here. So oil, basically, we were looking for a push up into this support resistance here, basically. So you can see all these wicks. There, and there's one somewhere over there. So that area there is basically where we bounced multiple times. So we came down, boing, 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 slammed through it, back up into it. So if we're going to get continuation down on oil, basically, that's likely where it's going to come from. If we're not, obviously fine. But what I am expecting is at least a pullback. So we've got a new propulsion gap formed now. Not big. It's a bit of a weird one out of the propulsion gap, but we've got this little one here as well, which is tested. But this whacking great propulsion gap here, I'd expect us to bounce down at least into there, if not do some kind of pullback on that. So resistance wise there, I mean, that's a bit too tight, but so we'll see. But I'm basically, we're massively extended on the hourly now, which is why I'm out at the resistance, and I'm out because we're on a 1 hour RSI extension. So I'll look to get back in and push to the upside, I think, on that one. Aussie dollar CAD, we'll have a look at that. Adrian, morning. Jacob, morning. Euro, US dollar yen. We'll have a look at all of this in a bit. So DAX, let's have a look at the news first. So news today, we've got Bailey speaking at 9:45. Bailey was speaking yesterday as well. So because Bailey was speaking yesterday, I wouldn't expect a massive amount of news that's breaking out of him this morning. Everything he said yesterday basically is going to be kind of repeated again today. So not much point in really expecting any impact off of him today. We got Lagarde this afternoon. That might well be some impactive news. And then we've got consumer confidence at 3 o'clock, which is half an hour after the New York Open. So consumer confidence is a bit hit and miss, so I wouldn't worry too much about that. Morning, John. Morning, Michael. So yeah, so that's news today. Not an awful lot. Overnight news. We've had Ren this morning. Something about the digital euro. Japan's parliament passes a record 115 trillion yen budget for this financial year. So they're upping their expenditure. Overnight news, we've had Australian retail sales come out as expected. The Aussies had a little bit of a pump. We'll have a look at the Aussie in a minute. Apart from that, that's it. So last night's Bailey talk, additional tightening required if inflation continues. Inflation is likely to fall steeply in the UK. It's much too high. That's all speculation. It's not at the moment, Bailey. It's going up. So, and also the Fed swaps once again show more likely than not we're going to get a hike in May. So another 0.25% coming on the US dollar. So that's bullish for US. Undecided as to what that means for the UK, but anyway. So quickly looking at the DAX this morning, we've got a very small gap up, not a lot, but may or may not get filled. We've got propulsion gaps to the downside. We're filling in the propulsion gaps from yesterday. So those are those propulsion gaps we looked at yesterday after we got the gap fill. That's where we were going. That's where we've been to this morning. So downside, we've still got this down here. Got a down the cards at some point coming up. Highs up at the high of last week, which is last Wednesday's high. We've got 1 minute to the open. And lows, looking down at basically 125 ADR, really, which is the low of last week, excluding Monday. So Monday obviously was this big, huge rally day. So low of basically Friday, which is 125 ADR. Other than that, this is obviously low of the week, which is yesterday's low. So just need to watch that area as well. So we'll see where we go at the open. Got 20 seconds to go. We'll have a look at the FX pairs. Let's get some thumbs up, people. We got 15 thumbs up, 60 people. Let's get some thumbs up. See if we can get some more people in. I'm not quite sure. I haven't been watching the stream numbers. I'm not sure if we got to 200 or not. I know we got up to 160 something. We've got some RSIs to have a look at. Opening range breakout on the pre-market 15 is to the high today. Ooh. Let's go DAX. So yeah, nice pre-market 15 opening range. So you've got 18 pip roughly stop on the downside. So if you're looking for something like 27 pip move to the upside, which would be 1.5 R, somewhere up there, 152.83. Watch that. The winner's circle is compounding the same as the prop accounts you mentioned. We can open with 10K. Don't know. Don't know what you mean by that. Compounding is a way of rapidly increasing your account size. Prop accounts are what you trade. Don't understand what you mean by that. You can't compound on prop, no. You blow it way too fast. You'd never be able to compound on prop. Well, you might. I mean, you can do anything you like, but bear in mind you've got a 5% daily drawdown. If you're risking 5%, you lose one trade, you've blown it. So you can't do that prop. If that's what you mean. I'm not sure. Okay, report stalling out at the top. Depending on what your trailer is on it, you will probably break even on it anyway at the moment if you've taken the pre-market. So we've got roughly 50 points to the upside. Morning outro. Just quickly looking at ADRs today. So far there's no ADRs. Nothing's hit weekly range. We had virtually no ADRs yesterday. So the weekly ranges are obviously still intact. Nothing on ADRs at all. The Aussies had a bit of movement. So we've had some decent movement to the upside, banked a bit. I'll have a look at everything we've banked in a minute. So yeah, some decent upside movement. So there is a potential that the Aussies might get some ADRs today, but we'll need to see what happens with those. New Zealand dollar as well. A little bit of upside movement on the New Zealand dollar. Wow, a lot of upside movement on New Zealand dollar. Swiss, is that a weak Swiss franc? Yeah, weak Swiss franc this morning. So something's going on with the Swissy. Everything pushing against the Swiss franc. So they're also contenders for ADRs early. DAX, there you go. So you've got your 1.5 hour return. So if you took the pre-market 15, what did I say? 27 pips. Done 31. So well done if you took the pre-market. So this is the 5 minute going in now. 5 minute opening range. Referring to your live yesterday about having a small account, you mentioned with a 10k you can have two 50k accounts. Don't know. Just got a call 1.5% out the pre-market. Good job, Diamond. So yesterday's live stream when we were talking about compounding, that was talking about growing a small account. Prop firms, a 50k account with a prop firm will cost you $300. So if you had 10k, you'd be able to get 30 50k accounts. Doing the maths in my head. So yeah, I'm not quite sure. You might go back and watch that. I don't know. Yesterday's session on compounding was purely about how to grow a small account into a big account as fast as you possibly can. And when I mean fast, I mean in 3, 6, 12 months. That's fast. If you want to trade prop, that is a case of, right, if you want a 50k account, go and get one today. It's $300 with prop. But you can't position trade in prop. You can, but it's difficult because you've got a 5% max daily drawdown and a 10% overall drawdown. So some of the instances, you know, you're gonna blow that max daily drawdown or that overall drawdown. So it's more about showing people how they can increase their account size. But it's basically gambling. So compounding is gambling. You are risking a high amount of money to try and get a, you know, if it was that easy, if compounding worked, right? People like Warren Buffett, people like me, people like everybody out there would be multi-millionaires all the time, wouldn't we? If you could compound an account from, what did we do yesterday? We did a 100k account up to 400k in a year, didn't we? If you could do that every year, everybody would be a millionaire. Doesn't work. All these courses selling you compounding, it's just, yes, in theory, on paper, in spreadsheets, in real world, it doesn't work. You're going to blow those accounts because it just, you know, you can grow your account and then start gradually increasing your risk. But if you're risking 3 to 5% or more per trade, you are going to have a losing run of 10 trades and wipe 30 to 50% of your account off in a week. Literally, losing run. If you take one trade a day and have a losing run of 10, yeah, in 2 weeks' time, you'll have lost half of your account. It's just, you know, it doesn't work. And then the trouble with compounding is, let's say you start with a 100k account, right? And you're risking, let's say for simplicity's sake, you're risking 10% per trade. When you go down to 90k, because you've lost one trade, you're now risking $9,000 instead of 10,000. You lose 2 trades and you go down to 80k, you're now risking 8,000 per trade. So to get yourself back takes longer, because where you were risking 10k a trade to start with, you're now risking 8k a trade. So when you have a profitable trade, it's less profitable than it would have been in the first place. So I mean, it just, you know, the theory is good. That's what I was trying to demonstrate yesterday. And it is totally possible, totally possible. as we proved, multiple times. Right, there's your 5-minute opening range. So we're sitting inside bar at the moment on the DAX on 5. We'll keep an eye on that one. ZK. Will the market reversal EA work on a cent account? Yep. It doesn't matter what the account is, it just takes trades. So it's no problem at all. Morning, Baggy. Right, so ADR's nothing to look at. We've got a few RSIs to look at, so we will go through those. There's a few things people wanted to look at. Aussie dollar CAD. Yeah, we'll look at that one. Euro US dollar and US dollar yen. Euro US dollars not extended, US dollar yen's not. We'll look at those. Okay, so let's start off with Aussie dollar CAD quickly. So obviously there's no extension, there's no opportunities for me. I got out of that trade this morning, the long that I took yesterday on that RSI extension. So if that's what you're looking at, you should have been in on this yesterday, and you are, well, I'm out of it now already. We have got this propulsion gap up here, which is already tested. May not be in play. That one certainly is. So there is more upside on it at the moment. Buy a scorecard for Aussie CAD is a long. It's range bound, but fundamentals for Aussie CAD are long, so it's a bit of a long. But the entry was on that yesterday. Straight in, straight out. Your reversal alert on that was yesterday evening. Down there. There's your reversal alert. Entry. Out. Done. Euro US dollar. Again, I'm out of that this morning. Entry was there on Friday. I'm out of it. What's it? Euro US dollar and US dollar yen. So Euro US dollar. This is a long against a long, so it's a difficult one fundamentally. You can kind of trade this in either direction, I think, at the minute. We've got this big propulsion gap to the downside here, which we seem to be on our way to. We're just pulling back at the moment. So I would say we're probably going to come back down 125 ADR, back down and sort that out. We have left in our wake a beautiful propulsion gap there as well. So potentially might move up to there today first, and then we'll come back down there later. So not sure. See if there's any fundamental, any retail bias on it. So retail bias is short, which means that we want to be longing it, hence why it's going up at the moment. So but yeah, entry was on this one there yesterday. It is slightly extended on the hourly, so there is a short opportunity to get into now. So if you're going to get into it now there, play it back down into there. It might push up into there though. So at the moment it looks like it's pushing on the lower time frame. So we're not really going anywhere at the minute, but we're just sitting up at the Asian highs. So just monitor it really, but shorts more than longs based on RSI at the moment, based on the RSI extension. If this does push up into there this morning, obviously RSI is going to get more extended. You'll get above the 75s. If that happens, I'll be getting in short as well. And US dollar yen. So US dollar yen. Got out of that yesterday. It's loads of upside target. So all these yens, they're so tricky, these yens at the minute. Really, really hard to analyze. Because we've just come out of a safe haven rush, and we're still in a the fear and greed index is still very much sitting in fear. There will still be confidence in the yen and strength coming through in the yen until we start coming out of that fear scenario and the market sort of loosens up a little bit. Then we'll get that changing. But at the moment, the market is still a little bit jittery. We are getting some strength in the yen. When that changes, we've got so many upside targets. We're going to come back up and sort all this out. It's the age-old problem, timing. Don't know when this is going to stop. At the moment, it looks like we are starting to look like a rounding bottom is starting to come into play. So like it long-ish. We haven't got really much US dollar. We haven't got much news at all this week. So there's not really any news catalyst at all. So at the minute, it's just not, it's not long, it's not short, it's nothing, it's sitting in the middle. So up to you. You can long or short it. We've got this whacking great propulsion gap here, which we have now just tested. So that is just a double bottom off of there. Obviously, that's where I would expect us to be heading. Long term, it's all down to whether the yen powers up and intervenes or whether not. It's a difficult one. All these yens are very, very difficult to trade at the moment. Opening range breakout, we are broken short on the 5 minute. That's the Nasdaq. Oh no, sorry, no, we're not. Scrap that. We've just broken the range low on that second 5 minute candle. So this is your 15 minute opening range going in now, and it looks like it's going to be an inside bar of the 5. So the 5 minute opening range break, the 10 minute and the 15 are all the same level today. So one of them or one of them, jump on board. We've got propulsion gaps and gap fills to the downside. So you're only going to get really a 1-to-1 out of that, potentially. Opening range to the upside, obviously you've got about 50 pips to the upside that we looked at earlier. So there's a little bit of upside potential up to there. We'll see where that closes. So there you go. There's those three covered. Done. Mr. Chris, in an Aussie dollar CAD short already. Cool. Morning, Adrian. Small blind on EU. This isn't poker, Chris. I think you're in the wrong room. Small blind on EU short now, and may add if it tags higher. Yeah. You can go either way on that. It doesn't really matter. Adrian, question. What is the best way to protect your account from the widening spreads at the end of day when using the market reverse alerts EA? Setting the trading hour to avoid the max spread correctly? Yes. So with the market reverse alerts EA, there's two ways to avoid spread. First one is, realised I'm down in the bottom left hand corner. I don't care where I live. Yeah, so first one is the time filters, time of day filters. So you can set this to true, and basically if you just set, you go and look at your individual broker and where the FX pairs open is. What I would suggest is you go half an hour to an hour on from the opening candle time, basically. So let's say it's a midnight open candle, just go with, 1 in there. An hour to end, look at your last closing candle, where that is. Let's say if it's a 23, I would set that to 22. Whoa, what happened there? Set that to 22. Yeah. So basically what that will do is it will avoid those, especially with the New Zealand dollar, those big spreads you get in that candle and that candle. Yeah. So if you do that, that will avoid that. The problem is if you get a reversal alert occurring in that period, you won't get an entry. That's the downside. There's nothing you can do about it. You either avoid the spread or you don't avoid the spread. The other way you can do it is by using the spread filter down here. So you've got a max spread filter. It'll have the same effect. Basically, you will not take a trade if the max spread is too high. So if you set that to be like 5 pips, for example, it means when you've got those stupidly big 25 pip ones, it won't get you into the trades. But when the spread goes down to a big spread, but not ridiculous, that the brokers, tend to spread you out and stop people out, that one will trigger. But either of those works, one or the other. There's no right or wrong with them. Wow, it's a big drop on the DAX. So there we go. There's your 5, 10 and 15 minute opening range, all at the same level today. You've probably just been tagged into a short. I have. There you go. Outro, trading futures later in the US. If I can get my data feed up and running, yeah. So I've got Jigsaw working now. Jigsaw sorted that out for me. Just in case you are, this firm trade day that I'm I've got the account with. When they tag their, just so if you use Jigsaw and you're thinking of using these, because I know some people have got Jigsaw, when they set you up on your TradeAway account on your evaluation, they tag you as a live account. So they tag their evaluation accounts as live accounts, although you access them via this. This is really confusing. When you log into TradeAway, yeah, you get 3 buttons. You get a live, a market replay, and a sim button. For those familiar with TradeAway, yeah, live, market replay, and sim. To access your evaluation account, you go into the sim area. Yeah. To access your live account when you're funded, you go into the live area. When you are doing your evaluation on TradeAway, you go there. However, they have tagged in the back end evaluation accounts as live accounts, although they are accessed via sim. So when you log into Jigsaw with TradeAway logins into the demo environment, which is where the sim accounts sit, your accounts don't show because they've tagged them as live. So to show your accounts, you have to have a live license with Jigsaw, which costs $50 a month. So they might be a good prop firm, but from a technical point of view in the background, they seem to have dropped the ball. So there you go. So if you're using Jigsaw and you want to trade with these guys, you have to go and get a live license from Jigsaw, which is $50. Jigsaw gave me one for free for a month, so I can do the evaluations. But when I go live, I have to have a live Jigsaw anyway. So there you go, just so you know. OLB to the downside is gone. So just watch the gap fill. When we get there, we might get a bounce, the same as we did yesterday. And we've got 2 propulsion gaps, which we're trading into as well from beginnings. So yeah, I've got to get my feed up and running this afternoon. I'm on GJ shorts and long in US dollar CAD. Made 0.5% on the OLB this morning. Not too bad. That's good. Any percent that you make is good. So just going to quickly run through yesterday, just so you can see what happened yesterday. So the H1 hedging set file did 0.5% yesterday, $500, sitting in 1.63. I won't go through all the trades that this closed out because this is still in testing, this one. So, but yeah, it banked 0.5% yesterday, so that's pretty good. Instant funding or advertising on YouTube now. The ADR reversal set file lost yesterday. Made a loss. Look. So yesterday, which was the 27th, we only banked twice. We banked the Euro US dollar. So that was a nice little ADR reversal. So there's your ADR hit to the downside, reversal alert, out. So that was nice and quick. And then Aussie dollar CAD, we had to take some drawdown control on that yesterday. Sorry, is that right? 27th, yeah. So yeah, Aussie dollar CAD, we did some drawdown control on that yesterday. So this one here, that initial entry, we took a drawdown control, which cancelled out all the profit from the previous trade. So we just basically went to flat, and then obviously this morning it's closed out that ADR reversal for a nice profit. So so yeah, you can see yesterday obviously tiny little loss, and then we've banked $400 this morning. The H4M5 just one closeout yesterday, which was Aussie dollar yen. So H4. Oh, so that was a really easy one. Look, straight down H4 RSI extension in on the 5-minute reversal, straight out, nice and easy. Buttons around. So there was your reversal alert, look there, and then straight in, straight out. So that's a nice easy in and out on that one. And the H1 mean reversion, I can do that here because this is the H1 account. So we banked 1.8% yesterday, done 0.5% this morning. So there's quite a few closeouts on this one yesterday. 27th. I'll run through them quickly. So pound yen, that was straight in. Pound yen, straight in, straight out. Yeah. H1 RSI extension in on M5 reversal, out in Asia. Aussie dollar, New Zealand dollar. Again, same thing. We got in H1 RSI extension on Thursday, held it through Friday, out yesterday morning. Not quite sure why we didn't get an exit there. It's interesting. I'm not quite sure why that didn't. Oh, that's Asia. Wonder if the spread was higher there. But yeah, didn't get an exit there. Did exit there. Weird. Anyway, but yeah, out of that. Aussie dollar, yen. Same sort of thing. RSI extension in, out, done. New Zealand yen. There's a theme recurring here. Look. In, out, done. New Zealand CAD. That was a short RSI extension there. Entered, went into drawdown on Thursday, held through Friday, out yesterday. Missed a bit. There's an entry there as well today on New Zealand dollar CAD, or yesterday rather. Pound US dollar. Again, nice easy one. That was an ADR as well as an RSI. In and out. And 27th, so still these. US dollar yen, again, US dollar yen, in, out, done. CAD yen, same thing, in, out, virtually the same trade. And pound New Zealand. So we've got out that one. So that was a multi-day hold. Multi-day hold. Oh no, sorry, that was a loss. Yeah, that was drawdown control. Again, I was going to say, wow, that was a long hold. That's drawdown control. So basically this position here, this is one drawdown control, second drawdown control. So I've had to do 2 drawdown controls off of that position. This one will be doing some drawdown control shortly at some point as well, I would imagine. So yeah, there we go. Good day yesterday. Banked Euro, US dollar, and Aussie CAD this morning. DAX struggling at the 15-minute pre-market 15 lows. So this propulsion gap is holding up at the moment. Let's see where we go from there. Let's just catch up on the chat. Then we'll have a look at what's going on with the RSI extensions. 1 win, 1 loss on the ORB. Morning, Jonathan. Caught a lovely long on GJ this morning. I'm out of that yesterday, so yeah. Reversal out there, very nice. Took that double bottom out and went. It looks like if I traded the NAS for London Open, would have been nice. Yep. Something going on in the stock market. Don't quite know what's going on. Not quite sure why the NAS has exploded like that this morning, but it has. Big drop. Don't know. Don't normally get that sort of movement off of the US indices. at the Frankfurt Open. So there's obviously something going on in the stock market. It's probably a stock in the Nasdaq down. Apple is down 1.2%. Microsoft is down 1.4%. Google is down 2.86% this morning. That's why. So the three big boys basically all dropping price this morning. Facebook's down 1.5% as well. Yeah, something's going on, isn't there? No filter applied. Can I not just sort it? No, that would be too easy, wouldn't it? Let's get Business Insider. No, none of these let you sort it because obviously that would be too easy to actually make it viable for you to see what the hell's going on. Theirs isn't even updating. Stock charts. Change. Price. No, they don't let you sort it. What's wrong with these companies? Come on, it's a data table. Surely you should be able to click on the headings and sort it. Anyway, but yeah, stocks are down. That's why Nasdaq is dropping. So that will have an impact on the DAX as well. That will get dragged down as well. So hopefully we'll get that ORB continuing to the downside. Gold seems to be going down to 1928. Not a signal. I don't know where it's going. It's going down at the moment. So we've got an upside target here to aim for on gold, which is just above yesterday's high. So that'd be a nice little liquidity run for them. We've got that target down there to aim for to the downside. So flip a coin, either go long to there or go short to there. Heads or tails, you pick. Whipping post, 1 hour propulsion or 4 hour, which one is better to target? No answer to that question. Either or. I'd prefer 1 hour over 4, but 4 are still there. You can answer that question yourself. How often do 4 hours get left behind and orphaned as opposed to 1 hours? If you go and have a look, you will find that 4 hours, obviously the fact that they're 4 hours take a lot longer to get back to. Hence, look how long that's taken. That's April last year. It's a year. But this is more of a coincidence than a being dragged back to. Hourlies are much more, I find them much more effective. So I prefer hourlies. Jonathan, see it, say it, sort it. Exactly. Some silly slogan they use for transport for London. Oh yeah, it is, isn't it? That's when you see a backpack unattended. See it, say it, sort it. Morning. Get the likes up. 111. Not even 55 likes. No. Come on. 100 people in here. More than 100 people in here. We've got 39 thumbs up. Hit the thumbs up button, people. Right. Let's have a look at RSI extensions. ORB to the downside is on its way into that propulsion, which is also yesterday's high. So that candle there, yesterday's high. So we closed on the high yesterday, obviously, if we look at the daily chart. Yeah, we just closed just off the high, look. So as our upside, downside is all the way down there, miles away. And obviously yesterday's low just need to pay attention to, but let's see. I think what I might do today, if we look at yesterday, basically, as soon as we got that gap fill done yesterday, we bounced. So I don't normally do this, but what I'm going to do when we get the gap fill today is going to watch the price action. If the price action looks like a potential bounce off of here, I'm just going to close this trade manually, because it's kind of a one-to-one, and I'd kind of like to bank it. The ORBs have been a bit hit and miss over the last week, so I'm just looking to kind of get some money in the bank. Obviously, because I'm going to think of doing that today, this is going to be the day where the whole thing collapses out of bed. In fact, do you know what the best thing to do is? Watch the NASDAQ. Watch what this NASDAQ does, because obviously the stocks are selling off hard in the US this morning. So they're going to bring the DAX down with it. So if this continues to drop, the NASDAQ, and we get some kind of fall out of bed, then it's worth holding. But if the NASDAQ starts to find support, I would probably do the same on the DAX this morning. Right, let's have a look at what we've got RSIs today. All hourlies, very few 4 hours at the moment coming up. The market's really, really tight and contracted at the moment. So we're not getting many RSI extensions on the 4 hours. As you can see from the 4 hour RSIs EA, it's done 6% this month. And it's very rarely got more than a couple of positions on at a time because the markets are just really, really tight. So at the minute, it's all about the hourly, which is where I'm sort of spending most of my time at the moment. I have been for the last couple of months, really. So so we'll start off with Aussie dollar Swiss. We'll have a look at the combined sentiment on these as well. Not the combined sentiment, rather, the overall scorecard. Combined sentiment is there, obviously, if you want to check that. There's nothing to look at short today. Longs, we've got Euro New Zealand and Euro odd. So it's the Euro pairs, basically, as longs. So those are good opportunities because both the odd and the New Zealand dollar are powering up this morning. So those will be coming down. So those are good long opportunities. So Euro odd, looking for longs. It's already going. So you need to jump on it quick. Reverse alert was in Asia and Euro New Zealand. Again, reverse alert in Asia. So those are good long opportunities. All right, so Aussie dollar Swiss hourly. We've got that propulsion gap to aim for to the upside. So at the minute, there's loads of propulsion gaps to the upside on this. This is target-rich environment, as you would say if you were flying a fighter jet. We've just had the extension to the upside on the hourly, which is just rolling over now. So if you look at M5, you've just had your reversal alert to go short. Target-wise to the downside is this area here. Potentially for a bounce continuation up. But on the hourly, yeah, nicely extended to the upside. It's just getting above 75 now. So waiting basically, you can get into it now if you want to, obviously, to trade back down into there and then coming back up. So potential good moves to the upside. We've had a weak Swiss franc this morning, which seems to be undoing very, very, very quickly at the start of London. So that's been a really weak Swiss franc. I would suggest this might just be pulling back at the moment, waiting for a new leg up. But Aussie dollar Swiss, it is a nice RSI extension to the upside. So we'll be looking for shorts on it. Potential continuation to the downside. Swiss franc strength. Swiss banking crisis is fixed. So no reason why that shouldn't come down. So it looks like a good short Aussie dollar Swiss. Aussie dollar US dollar. Again, nice extension to the upside. This is based on the Aussie dollar move that we've had. That Aussie dollar move that we've had this morning is literally off of the retail sales figures. Look, which are yellow news. So yeah. But yeah, that's basically the Aussie dollar retail sales this morning, which has given that a bit of a pump, and the New Zealand has pumped alongside it. Yeah, DAX is just putting back inside the opening range at the moment. We've got a big propulsion gap on the DAX. So look at that sort of movement potentially. So yeah, like that, Aussie dollar, US dollar as a short. We have got a little bit further to go to the upside on this as well. So this could well just push up into there, then come back down into this area here. So you've got an entry there if you want it now, but exactly, let's look. So RSI extension after the push, enter, pull down into propulsion, push into propulsion, drop. Couldn't make it up, could you? There you go, push to the upside, pull down into propulsion, push up into propulsion, drop. Exactly the same pattern playing out again, potentially. But we could get in here, it fills that, comes up there, and then slams up higher. Don't know. But either way, just deal with it after you've got in. But that's a nice reversal opportunity. That's gone. So I'll be looking up there. So there's more long, there's definitely more upside potential than downside potential on it. So, but either way, you know, as long as it's moving up and down, it doesn't matter, does it? Be able to get out. That's going to require as well a weak US dollar for it to get all the way back up there. The news that we've got coming out at the moment is that we're going to get another 0.25 interest rate increase. So we're going up to 5.25% in May. So that is still bullish from a US dollar perspective. Click. So where we are now, after that 0.25% increase, we're looking at going up to 5.25. Again, that puts us head and shoulders above all other countries from an interest rate perspective. So it makes the US dollar even more good looking for putting your money in there. GDP is dropping on the US at the moment, and inflation is also dropping, and unemployment is going up. So this lot is all going in the wrong direction apart from inflation. That's going okay. So we are getting to the point where they're going to put the brakes on this. It's just a case of they're a little over keen, I think, to get this interest rate, inflation number down faster. A 0.4 decrease quarter on quarter is good. It means they're going to be able to knock somewhere between 1.5% to 2% potentially off in a year, which isn't bad considering you've got a 2% target. They will have achieved that by end of 2024. Everybody else, like the pound, for example, ours is going up by nearly 0.5% a quarter, and we're at 10%, and our target is also 2%. So they're at terminal rate. They're so close to stopping that. So we are going to see some weakness start to creep in on this US dollar, but at the moment, I think we're going to get a continuation. Just coming out of the propulsion gap on the DAX. See if we get some sellers stepping in there. So Aussie dollar, US dollar, yeah, potential short there. CAD Swiss, again, another potential short there. This is nicely extended on the hourly. The Swiss franc at the moment is a little bit crazy, as you know. We've had nice safe haven run, then we had a banking crisis. Then the banking crisis is getting sorted. What's next? The Swiss is one of those currencies that gets massively affected by everything. So I've currently got a long on this at the moment from back here. Didn't get second position in because I'm scaling in one ADR apart. So I'm back to break even on it, basically. There's lots of upside potential on this one. But again, as long as this thing's moving up and down and you're targeting roughly half an ADR or so, you can get in either direction on it. So it's a nice short opportunity. If you look at the buy scorecard on the Swiss franc pairs, they're very, very mixed. CAD Swiss is one of those that is a strong sell. One of the reasons it's a strong sell, it's a medium sell, but the main reason is because of retail sentiment at the moment. So the retail crowd are all longing this, meaning that we want to be going short on it. Yeah. I am part of that retail crowd at the moment, having a long position on. So it's been driving down very nicely. So there is good potential for this to drop down another leg. I would say we're probably going to come up and test back up in here. If we do that, then I'm going to be out of it somewhere up there. But it could also come up into the highs. But as with everything, yeah, just get in, get out, scale in, scale out, and just manage the position once you're in whichever direction you're going to choose on it. But there's no real bias from a technical point of, from a fundamental point of view on this at the moment. The CAD has been coming down hard on oil. Swiss franc is always fairly strong, so that's why we've had this massive bias to the downside. Oil is picking up. The Swissy has been knocked by the Credit Suisse debacle, so this could quite easily be a peak formation low here where we start to push. But when we've got fear, we always run to safe havens. Swissy is naturally one of those safe havens we run to. So the market has been in turmoil, and obviously everything's been coming down for the last year or so. Oil hasn't helped this, but it doesn't mean you can't trade it in either direction. This is one of the ones I got into a bit of a squeeze on, as you can see. Good example of a squeeze. Exited there. So yeah, CAD Swiss extended. It's only just extended though, not massively extended. So again, I would probably be waiting maybe for a little bit more of a push up, but your 5-minute reverse alert, you've just had it. So you're in short exactly where I'm in long. Someone's going to win, someone's going to lose. Well, sorry, someone's going to take profit, someone's going to go into drawdown and take profit later. We all win, don't we? Pound Swiss, again, extension there, Swiss franc. So this Swiss franc's caused a very nice extension on multiple instruments at the same time, pushing up. Pound I like as a short. So obviously with everything to do with the pound, the market is a little bit bullish on the pound. However, the pound is a definite sell from a fundamental perspective. If you go and look at the bias scorecard and look at all the pound pairs, everything is pretty much neutral or negative on it. Yeah, the only one we've got as a long when you include the pound is euro pound, which is euro long, pound short. So everything is short the pound basically. We've got some retail sentiment giving these a little bit more of a positive spin than they should have. These will be zeros or minuses if we don't get retail going the opposite direction on them. So yeah, basically I like the pound short. Both of these propulsion gaps have been tested once. Yeah, so we haven't touched them, haven't completely closed them out, but they have already been tested. So it doesn't mean that we're not going to come back and do them again. As you can see, that's kind of what we do. We test them and then we come and finish them off. Yeah, so we've definitely got a movement to the downside coming on this. It's whether or not the Swiss franc is going to power up enough to get us down there in the short term, or whether we're going to have to wait a little bit longer, i.e. wait to get back up into these highs. So extended to the upside in the same way as we were there and there. Look at the drops we got on those. No reason why we shouldn't get a profit take on this move in the same way as we got one there, and we got an accumulation there really. Did get a bit of a drop, but so yeah, so looking for a push back down to the downside on this one. Swiss franc strength is what we're going to need to do it. The pound is weak, but the pound, when it's not strong, it's more like that than like that. So we need some Swiss franc strength to come through. But it's a nice extension at the moment on RSI. It's gone parabolic straight up, yeah, and it's coming back straight down. So that's a good looking opportunity short, but you know, you these ones I'm talking about now, you're kind of in them already or you're missing them. Pound US dollar, same story. Nicely extended pound US dollar. We're getting nicely embedded up here as well on the 75. I'm going to get into this one short this morning, I suspect. Just coming up into a nice area of resistance as well. Yeah, I think the sentiment on this one, yeah, is long. So the retail crowd at the moment are shorting this basically, which is why this is pushing up. So if you look at the sentiment on the pound US dollar, 78% of the market is short. Yeah, so the market is driving up at the moment. Every time those retail guys hit that short button, They're leaving their liquidity at the high, grabbing it. Short it, liquidity at the high, double top it, extra liquidity, grab it. Push up, shorts, liquidity, grab it. Shorts, liquidity, shorts. When we get a reversal alert, shorts, liquidity. And they'll keep doing that until they get the message, or until they don't need any more liquidity, and then they'll dump it the other way. Either way. So the liquidity is all sitting at the highs at the moment. We have got this area of resistance coming up here. Yeah. So there's a really nice resistance level coming up. So I suspect when we get up there, that's where we'll find some kind of profit take start. We've got a propulsion gap down there. That one's done. But it's basically the pound and the US dollar. Yeah. So the fundamentals are long US dollar, short pound. So yeah, nice looking short. But as you can see, we've been pretty sideways on these. So I've got a nice short in there. But then again, I've had nice longs on it as well. Doesn't matter at the minute. Everything's moving so nicely at the moment. You just get in and get out. Take quarter of an ADR, take half an ADR out of it when you can. New Zealand dollar Swiss. Same thing, Swiss franc. Reversal alert on this one. Just had it, literally just had it. So nice push up into propulsion. That gap's filled. This is unfilled but tested. These are untested. So I would say at some point we're coming up into there, but this is all going to be driven by Swiss franc. So just got to wait. Right now, nicely extended. Yeah. So looking for a pullback on this one. Drop down M5 reversal alert in. New Zealand dollar, US dollar. So I'm hedged on this. It's a tricky one. So basically, got into a sell somewhere. I'm quite sure where that sell was. Oh, that's this morning. All right, okay. So yeah, got into a sell on it this morning. Was in it long from here. Yeah, so I got a long here. Yeah, and I've just taken a short there, so I'm hedged on it at the minute. This basically moved so fast and so hard. We got an extension to the upside, but we got absolutely there's weird divergence going on this thing here at the moment. It's just a really weird situation because we've been in such a range. And literally it's been 2 days up, 2 days down, 2 days up, 2 days down, 2 days up, 2 days down. The RSI is kind of like a beach ball at the moment, getting bounced all over the place. So this happens every now and again. If you're using the market reversal alerts EA, it will actually get you hedged in on RSI extensions. It's not often it does that, because typically what happens is when you get into a position and it pushes up, you get out of your long before you get into your short. But this is such a tight shift. The shifts in RSI, as you can see, are happening so regularly from high to low. The movement is massively strong in whichever direction it's going in. It's giving you these RSI extensions. So basically I'm in both directions on this. So it doesn't matter whether this goes up to there. If it goes up to there, this is going to go out. If it pushes back down into this one, into this gap fill, which we looked at yesterday, that's fine. I'll get out of the sell and then I'll enter another long and I'll get out in the next move up. But you know, as long as this keeps doing that, okay. So yeah, I'm in that one already. Hedged, and then US dollar CAD is the other one. This is the only one we've got extended, really extended at the moment. So I've got one long on this, which was taken, I think, yesterday. Yeah, first entry on this one in there yesterday. We had an M5 reversal alert. Asia has just pushed down a little bit more. We've just got another reversal alert in there this morning at the end of Asia. So looking for a big move back up into this propulsion gap. At some point, we've got this one here as well. We may find some sellers kicking in there. It's a double bottom bounce as well. So confluence is there. Beautiful. If it pushes down and takes liquidity, yeah, we're just going to see, you know, a little bit more movement down, a little bit more movement down. a little bit more movement down, potentially a little bit more movement down, keep making these new lower lows, and then we get out on the profit take moves after the new lower lows have been made. So pretty simple. And US dollar CAD, news-wise, I would expect everything to decline in 2023 Russia, not just your oil and gas. News-wise, for the US dollar this week, we've got consumer confidence coming up this afternoon, potentially could move it. We've got the Aussie dollar CPI. We've got the GDP for the US dollar on Thursday. And then we've got CAD GDP on Friday. So when you look at the news events that we've got coming up this week for the US dollar CAD, there's 3 catalysts. So at some point, we're going to get one of those moves fast and hard. If it's down, that's fine. We'll get out on the profit take after a second entry. If it's up, we're out, aren't we? So it doesn't really matter. So that's the nicest one out there at the moment, US dollar CAD. Apart from that, RSIs are flat, ADRs are pretty flat. So those are your opportunities out there. I'm on half of that already in one way or another. Pound CAD from yesterday. This is the aggressive drawdown control position that I got into on Friday here. After this multiple day sideways move, we're basically in balance at the moment. We have now put in a new low, so the market structure is shifting very nicely now. So we've got this high, this is our peak formation high. We made a new low, we pushed up, made a lower high, then we made a higher low. So we went into a symmetrical triangle situation. We broke down, lower high, lower low, looking for lower high, lower low. So we are starting to roll over nicely on this pound CAD now. This is the aggressive drawdown control position. It's still in profit. There's my stop above those highs. So hopefully we might get some movement on this one today, but it is so unbelievably slow. It's a beautiful potential rollover going on. Yeah. So market's just rolling over nicely, looking to come back down into this propulsion gap. That one is my target, which is the closest one. That one is the aggressive target, if you like, to the downside. We've got another one all the way down here, which is miles away, but that's weeks away. So yeah, that's turning over nicely, that pound CAD. Right, DAX, we've just tapped the propulsion gap to the downside. Buy limit orders have triggered it out of that. So there's that perfect push back into propulsion, back down, test propulsion. So we're now basically forming a propulsion gap potentially here. And the gap fill is not done yet. So up to you what you do with that. We're not down to gap fill yet, but it's on its way. There we go. That's everything. Thoughts on pound yen? Have I done pound yen? No. So pound yen, basically, we've got this return to origin play still on the cards. All of these yens, every single yen, when we had the rush into the safe havens on the banking crisis, obviously that we had that huge like 300 ADR move or whatever it was on multiple yen pairs. Since then, we've pushed back up into it, and then obviously we had more banking problems. So we've pushed down again, made another new low. They've taken all that liquidity and they've run off with it. So there's a high probability, I think, of getting back up to there, but that's going to require a weak yen. So it's all to do with the yen. The yen, there's certain currencies, the Swiss franc, the US dollar, and the yen. When they power up and they want to move, they move, and there's nothing that will stand in their way. Yeah. So it doesn't matter how strong the pound is, if it has the best possible inflation news in the world, inflation drops by 0.5%. If the yen powers up, the pound's coming down. So we need that yen either to be massively weak to get up there for a day or two, or it's going to power up or stay medium strength and we're going to drive it back down. So you've got a nice propulsion gap which is tested down there. You've got a nice propulsion gap there which is pretty much done. I would class that as gone, to be honest. So this little accumulation break here, that is where my downside target would be for a short. For an upside target, I'll be looking at return to origin. If they're going to do that though, why not come and take those highs? So you're looking at something like a 130, 140 ADR move to the upside. But right now, sitting in the middle of nowhere. So you had an opportunity to get in short on it yesterday. Yeah, on that RSI extension. I don't know, on pound yen. Those are my thoughts. It's going up or it's going down to there or down to there. I don't know which. But if you're position trading, make your mind up. If it's going up to there and you go long and basically decides to come down, take a second position and then get out on the push up. If you think the opposite and you go short and it decides to push up, take a second position and get out when it comes back down again. DAX is still pushing down. David, thoughts on entering trades risking 0.25% per quarter ADR, aiming for half an ADR. Additional trades taken at least quarter an ADR apart. Yeah, you can do that, but bear in mind if you get a squeeze against you for 3 days solid, you're going to be in a lot more positions and a lot more drawdown. So back test it. What I would say, David, is get a set file using half an ADR as a target and a scale in. Run a test on pound US dollar over 6 months or something, and then change the set file and look at the drawdown. You're gonna have to watch it as well. So, but the closer you, and you know, this is the thing with exposure. The closer you scale into something, the more exposure you're going to get. Yeah. So the reason this is taking a little bit more risk at the moment is because it's scaling in one ADR apart. So the number of entered trades is smaller than normal. Yeah. So DAX, we've just completed the gap fill on the DAX. Not the gap fill, sorry, the propulsion gap fill. Depending on what you class as a gap fill, it's pretty much done, isn't it? So yeah, the closer you scale in, the more drawdown you're going to have. So the reason I use half an ADR as a very bare minimum for scaling into positions is, if you look at this entry here, let's say we're getting short here on the pound yen. My next entry on this trade isn't going to be until we get higher, much higher. So half an ADR is 132. So roughly there. Yeah. So if I get in there, my next entry is going to be absolute minimum is going to be there. Could be anywhere up here, couldn't it? Could be much, could be 1 ADR, 3/4 of an ADR, could be anywhere, but there. So if you get something that goes into a range, the danger with using 1/4 of an ADR is you get in here short, it pushes down, it pushes up, and it gives you a reversal alert there. You get into a second position there, and then it goes 1 ADR against you. What you've actually got is double the exposure on than you would have had if you hadn't have had that close together. So it's more risky, but then again, you're going to get out of positions faster and or make a lot more money with those positions. But when things squeeze, you're going to be in much more pain. So distance is an important thing to keep regulated, which is why this is why I use the MA to do everything, because the moving average, the EA to do everything, because the EA has no psychology. It's not a human being. It goes, let's measure from here to here. Is it half an ADR or more? Yes, great, get me in. If not, I've been told not to get into the trade. Whatever you may think is going to happen, always factor in the worst case scenario as 90% chance. So whenever I'm looking at anything, I'm going, right, I reckon it's going to do that. So if I took one there and one there and it came down, happy days. However, what if it did that because we had a massive yen weakness and the pound inflation dropped dramatically? What is my pain going to be? Always think worst case scenario. This is one of those jobs where you have to think negative all the time. you've got to be thinking worst case scenario. Best case scenarios will play out. Everything that is good will just happen. Everything that is bad, you have to factor in, what am I going to do when it gets really, really bad? Because the good stuff just gets banked. The bad stuff gets you into trouble. So the tighter your entries are, the more trouble you're going to experience. Patience. Yes, you will get in and out faster, but we're not in this for speed. We're in this for long-term gain, not trying to make a million and buy a Lamborghini. We're just pushing out that propulsion gap on the DAX. So gap fills for me, when I see a gap, it's better to look at yesterday's gap actually. Yeah. When I look at gap fills, like this one here yesterday, I don't use that very last wick or that close or that high. I look at, there's an area there roughly where we've gapped from. Here we've got this high, this high, this high, this body. If you look at that whole area, some would say that there's no gap there at all. Others would say that that gap is now filled. Technically, the high of that last candle or that last candle close is there. We haven't actually reached it. But the market, when it's trying to sort out these inefficiencies that it creates, you will find when you get the last person sorted out their position, last institution sorted out their inefficient position, it will just go if it wants to. So I'm always, when we get to these sorts of areas, I'm looking at it thinking, right, is this it? Have we had that gap fill done? Is technically the market saying, right, boys, we've done it. Let's do what we want to do next. We don't know what that's going to be, but just be cautious. When I'm seeing wicks coming in like this, at this area, I'm thinking the sellers are stopping their selling, and there's potentially a chance that they might get run over in the other direction. So just be a little cautious. Obviously, the danger of being cautious is that market structure just continues exactly as we want it to, and all we're going to do is pull back and then drop and put a new leg in. So keep an eye on the Nasdaq. Still coming down hard. DAX probably going to do the same thing. Okay, let me catch up on chat. There's not a lot of it. Where is everybody? 107 people in here. It's quiet. Jonathan, I've randomly got some background music on and it complements the stream a lot. I've done a little vid and I'll stick it in the Telegram. Euro odd. If you got any pairs you want to look at, shout them out. Euro ad odd. I've got a short one at the moment. So we've got this really nice resistance that's holding like a rock at the moment. Here. But targets to the downside. Yeah, accumulation break there. Propulsion continuation and retest there. Another little propulsion gap there. That's more of a V shape though. So, but there's more downside targets than upside on that one. RSI is just coming out of the low. So I'm just going to move my stop to break even on this trade. So basically stop, just basically break even. Just in case, what I don't want is one of these candles going in like that. And it's suddenly flying and not giving me an opportunity to get out the trade. I just don't want to miss it. This is looking very, very, very wicky. Look, very wicky. Yeah, Eurowod. It's an RSI extension to the downside. It's just tapped it. So we're holding very, very tight at the moment in this range. So this is what, 1, 2, 3, this is fourth day in this balance. We're holding at this high. Don't know. It's euro, it's odd. Euro should be long. So it could go up into that propulsion gap and drop, but there's lots more targets to the downside. I'm going to need some Australian dollar strength, which we've had this morning. So it depends what happens with the euro today, really, but don't know. There's no real entry on that for me. How does propulsion gap get calculated? Morning, Neo. So basically, if you go to M.A. Perry's website, Strategy Lab, there's a full explanation on his website. No. No. Ooh, look at that mouse. Ooh, that's good. Oh my God. The Strategy Lab, sorry, thestrategylab.com. There's a full explanation of wide range bars on his site. There's loads of information on here. So the official definition of a 1, 2, 3 gap or wide range bar is that this candle, yeah. Let's find one that's a bit easier to see. There. Let's use this one. Wait. Oh. Yeah, so we use this one here. That's not a very good example. Hang on, let me find a better one. That's better. So we're using this candle here as the example, yeah? So it has to be a big, strong candle, obviously. The candle here, this candle, the height of that candle has to be larger than the 3 preceding candles. So this has to be a big propulsion move, yeah? Big, strong push. So it has to be larger than the previous 3. Some people say use 2. And if you go into the wide range bar indicator, you will find a look back bar count. Yeah, and that's set to 3. So basically what that is doing is looking back 3 bars and saying, am I bigger than those 3? The highest point of the candle before it and the lowest point of the candle after it, okay, have to be apart, which creates the gap. So the gap is the difference between the low of that candle and the high of that candle. Yeah, that causes your propulsion gap. So that's basically how they are created. So this one here, for example, yeah, candle is wider than that one, and that one. There's the high of that candle. There's the low of that candle. There's your propulsion gap. There's your retest of the propulsion gap again. Yeah. So you'll find some wide range bars, some big candles. So there's one forming right now, look here. There's the gap at the moment. But this candle at the moment, obviously it doesn't form until this candle. You've got to have the candle after the wide range bar, after the propulsion candle, has got to completely close, because we need to know that the low of this candle is not going to be below the high of that candle. Otherwise the gap can't be there. But you'll find some where you will see, we had one actually yesterday, didn't we? On the, here we go. Right, perfect. Look at this for an example. Oh, absolutely perfect. Right, so this was yesterday on the NASDAQ. I drew this in manually, look. Because this candle is not a wide range bar, technically. Now, this is the difference, right? So this indicator that I use uses M.A. Perry's calculations, who invented this theory, perfectly. Yeah. So this candle, the high of that candle and the low of that candle leaves a propulsion gap. So in theory, I would say that is a propulsion gap. But because this candle here, the size of that candle is smaller than that candle, it's not a propulsion gap, because this candle has to be larger than the 3 preceding candles. Yeah. So that's why that one did not paint as a propulsion gap. So if I come into here and change the look back to 1, ta-da, you see, we now have a propulsion gap. So if you want to use the WRB indicator to draw in every propulsion gap, regardless of M.A. Perry's actual rules for what a propulsion gap could be, if you change that to 1, all we're saying is that this move has to be bigger than the one before it, which is very rare. That is not going to be the case because this is the propulsion candle. The idea is we move so fast and hard that the next candle doesn't have chance to pull back and be efficient when it trades up and down. So it leaves it behind. So there's people trapped in here. And this is the key to wide range bar theory. There is banks and institutions trapped in there in positions. They need to get back into those positions to sort them out. And that's why propulsion theory or wide range bar theory works. So there you go. So that's the rules. I leave it as it is because I think his theory is actually good. You can see this one is left completely wide open. So, you know, you could look at this and say we're coming back to retest that area, couldn't you? And there's a good chance that we probably will. So if you leave that there today, that is in essence probably still open. That one is retested. Yeah. So whether that is going to get retested or not, I don't know. I've never tested it without the standard settings, but that's the way that I look at it anyway. So there you go. Perfect explanation of WRB theory. 1 hour 24 in. I'll clip that out and explain it in a vid. I will put that on YouTube as a short. Right. Let me just actually put that as WRB. Chris, still here? Just got in US 30 for a sell, Daniel. Okay. I would probably get in that this afternoon personally, but I seem to have a little bit of a data hole at the moment. Something weird going on with my Dow. Don't know what it is. US dollar yen. So US dollar yen, basically, we still have a lot more upside targets than downside targets in this. We got US dollar news potentially this afternoon. Sorry, bear with me 1 sec. Just watching the DAX. So we're pushing up a little bit out of this potential gap fill area. So hopefully this is just a pullback and then continuation structure. And hopefully it doesn't grab me. I'm basically break even on it. So I'm not taking a chance. So yeah, US dollar yen. I've already covered this one, but yeah, at the moment, there's nothing, no reason to get in at all. It's either going back down to here, although I'd class that's probably filled. So more likely it's a long today, more likely. Although retail is longing it as well. So that would indicate that they probably want to come down and take the liquidity from the lows as well. So that's where the liquidity is sitting at the moment. Don't know. It's just not. It's not set up for me at all at the moment. I think I'm going to save 30k for a savings account. I can live off 3k a month. Yeah. Save 30k for a savings account. You mean for a trading account? You're going to save 30k for a trading account. Why not get to 15 and try and compound it? We proved it worked. Took a US dollar CAD this AM on H4M15, looking for 137 initial target. 37, yeah. Just under half an ADR, or just over a quarter of an ADR, whichever. Oh, actually, if you're in there, yeah, no, you're yeah, perfect. That'll do.
Thanks for the follow.
Morning, Freeman. Oh, sorry, thanks for the follow. Somebody's followed earlier. Sad BR. Don't be sad, BR. Welcome aboard, and welcome aboard, Neo. Another Neo. Two Neos. Actually, we'll probably close at 136,600-ish. Yeah. Okay. Morning, Anna. Cool. Right. I've covered everything. Nothing else to talk about. So unless anybody's got anything else to talk about, I might leave it there this morning. Banked 0.5% already. Still babysitting this pound CAD trade, which is now back above my initial entry for my aggressive drawdown control position. Yeah, I haven't really got anything else to cover this morning, so we'll have to come up with some more content to cover when it's quiet. Morning, Chris. Sorry, did you answer my question or did you miss it? Yeah, I answered your question. No, I didn't. On your H1 hedging, what is your TP set to? Half an ADR. I've put the set file in Telegram. It is set to I think it's half an ADR. Yeah, half an ADR. Also, have you back tested on H4 hedging? No, haven't. Did some back testing on it yesterday with a TP of 1 ADR and results were decent. Yeah, do it. Obviously, H4, you're going to get a lot less entries on H4 timeframes. So the reverse alerts are a lot fewer and far between, obviously. So it's basically, I mean, you can run so many different strategies with the market reverse alerts EA, and it's a case of you need more capital. The more strategies you run, the more exposure you put on each instrument, the more capital you need there. So you've got to pick one. H1 is a really nice time frame from a perspective of actually getting into enough entries and getting out of those entries fast. H4, you're going to have to wait a lot longer to get into those entries, and they're going to take a lot longer to play out. Yeah, so it takes a lot longer for an ADR move to happen than it does for a half an ADR move. So, but obviously your risk will be the same. Typically, you'll still risk 0.25% over half an ADR or whatever. You can obviously increase your risk. The more you increase your risk, obviously, the more chance you've got of banking faster. And that's why I'm developing the H1, or rather retesting now the H1 hedging strategy, because I'm trying to get a hybrid position trading model that will work in prop. And prop, you can't use M5. It's too fast, it's too aggressive, and it gets into too much drawdown. It does work, and it will work, but your conditions have got to really be right. With H1, as you can see, this is what I think it's 10 trading days now, isn't it? 14. So we're on the, yes, we've got 2 weekends in there. So this is 10 trading days. It's done 12.5%. We're sitting in 1.5% of drawdown. This seems to be the sweet spot to me, and from the testing that I did. H4, I think you're just going to find it a little bit too slow. So for some prop firms, you might find it goes over 30 days. So you might not manage to get over the line in time. So I don't know. But if you're using it on a personal account, it doesn't matter, does it? But there's only so many strategies you can run before you run out of literally capital to trade any more strategies. So, but yeah, it looks. I haven't tested it on H4. It's one to test. Rahul, thanks so much. Perfect explanation. I am motivated and learning a lot. Cool. That's the purpose, to learn stuff. Gold is choppy. Where's our friend? We haven't got him out this morning, have we? What about him? Mr. Week. Gold is choppy. We haven't looked at oil. I'm going to look at oil again as well. Yeah. Very choppy. That's because you're trying to scalp M5, I suspect, Chris. Stop it. Stupid. It's just stupid. I don't do it, so it's stupid. So oil, I got out, I've posted in the Telegram group this morning, I got out my oil this morning, got in here, got out here. Now it's pushing, obviously, because I'm out. But anyway, so yeah, watching this level. We've still got lots more upside in this. So I'm basically watching for pullbacks now. So where we are at the moment, next leg up, looking for some kind of pullback on wherever we end up today. I'll be looking for some kind of pullback to get a new entry in. So hopefully we'll get an RSI extension, which is basically what alerted me to get in on that propulsion break, which I did. So hopefully we'll get another extension on RSI to the downside. But if it just pushes and pushes and pushes, I'm not going to jump in. Fear of missing out is very dangerous. So I'm not going to jump in. I'll just wait and miss it. But I've taken what I've taken out of it. So I'm happy with the trade I did. How are you managing risk? That's all covered in the bootcamp. Babas. So if you go to the website and just go to the position trading bootcamp, risk is all covered in day 3. Yeah, 4, sorry, day 4. I can't go into it in detail now because we would never leave. How far will you stretch a position when in loss? Until I'm out, which is all covered in the bootcamp. So you just wait and do drawdown control along the way, yeah? It's all covered in day 4. But don't go to day 4, go to day 1. Get to day 4. If you go to day 4, you won't understand why you're doing what you're doing in day 4, because you won't get the whole premise of day 1 and day 2, which explains all the theories as to why we're doing what we're doing in day 4, yeah? So do watching all of it. People do. I've got statistics on all my videos on the bootcamp, yeah, and the watch time on this tends to go down, right? And then this one has got really, really high watch time, and this one has massive watch time. Why? Because this is called strategies. So what people do is they get an introduction and go, oh, right, okay, so he doesn't use a stop loss. Okay, what indicators does he use? Okay. So how does he get in with those indicators, right? You miss the entire theory of the whole premise of what I do and how to do it. So this is what I liken to reading the first chapter of a book and going, oh, these characters look good. I wonder who dies. This is the important bit, yeah? This sets you up. This teaches you why we're doing what we're doing. This teaches you what we use to measure these things. This teaches you, if you're going to do this, what you need to be aware of so that you don't blow your account. This teaches you how to actually get in. Every single one of those is an integral part of the entire position trading methodology. And if you don't do all of them, you won't succeed. You just won't succeed. So just don't. Either sit down and watch the whole 10 hours 12 hours or whatever it is, or don't, because there's no point in picking bits and pieces. Any suggestions on algorithmic trading? Any course, platform, programming language? Are you new in here, Rahul? Go to the website. Literally, my website, if you read everything on my website and nothing else, you would become a successful 6-figure a year trader. It's all free. Learn it all for free. Tell you everything about everything. I can't go into all the questions you're asking now are like, what is the meaning of life? I can't really give you that answer because we'd need to sit down and have multiple copies over a few years to actually get to the end of the conversation. Yeah, it's all on the website. There's loads of content on there. But if you can't be bothered to read it and you want to skip to the Lamborghini bit, obviously I can't help you. Every cab position is mooning. Every cab position is mooning, apparently. Yep. So weak CAD this morning. So yeah, just push on the CAD at the minute. I don't think there's any news. Oil. So that could be to do with oil. We might see if there's an oil movement. Yeah, don't know. CAD is just moving. You still think we might see a crash in the pound CAD? Well, the pound CAD will come down at some point. Yeah, I wouldn't call it a crash. Again, Babs, have you done the position trading bootcamp? If you have, you know why I'm short. Because I got in short and it's pushed against me, so I've had to get in shorter. I don't know what it's going to do. I've just managed the position as it moves. The whole purpose of this strategy is you get in and you deal with the position. If it works, you bank it. If it doesn't work, you manage it. I'm managing pound CAD. I'm hoping it's going to come down. If it doesn't, I'll do some more drawdown control and manage the position. I won't use prop firms, have my own money. Cool. Notice YouTube commercials break in stream more than usual. YouTube commercial breaks in stream more than usual. I don't know. I don't control that. I have not changed anything in the stream, so it's the same as it always has. If they've decided to squeeze a few more ads in, that's probably because Nirav and Greg Secker haven't got quite enough exposure to you yet, and they need a little bit more. If you haven't bought Greg Secker's stuff and you haven't bought Nirav's stuff, they're never going to stop chasing you. You have to buy it. No. Sean, I have been building a support resistance EA for the last 5 months. And it's similar to your position trading. Your system helps me understand myself. And the drawdown is my friend, not the trend. Excellent. Morning, David. How you doing? You've been building this support resistance EA for the last 5 months. What are you coding? 1 line a day? I know what you mean. You've been developing it over 5 months. DAX is holding firm at the moment. We're stuck down here. So I would say that gap fill's done now. If you're playing the gap fill, it's done, I would say. But we will see whether we get that continuation push. NASDAQ is starting to flag a little bit as well. So we'll see if we can get a new leg on the NASDAQ. We've got propulsion gap targets to the upside on that to fill. We've got one from yesterday as well, upside to fill. So there's plenty of potential movement to the upside on this. So, these stocks are really hurting this morning in the US. So I suspect we'll probably get a little bit more at the open as a drop. But if you look at the NASDAQ, we got this low here, which 126.12. If we do get down there today, obviously see where the DAX is by the time the NASDAQ gets down there. But opening range break at the moment was straight in short, one entry, and still in it. So hopefully we'll get a decent push to the downside on this and continuation. All right. I've got nothing else to cover this morning. So I've covered all the pairs that are extended. We've had the RSIs obviously trigger again on the hour. So pound Swiss has got a little bit more extended. So there's an entry opportunity there, definitely. So we've had the reversal already on it. 15-minute we haven't had yet. So there is an opportunity there on the 15-minute for an entry. And Aussie dollar Swiss. So again, these Swissies, good opportunities. Franco, thank you. Good night. Okay, you're off. Evan, that's okay. Thanks. So yeah, I'm going to leave it there this morning. There's nothing much else to cover. I've got to go and get the futures software all set up. I've got to go and buy some level 2 data. DAX is just putting a lovely bearish candle. Nice push to the downside. So we might get that second leg starting. So yeah, I've got to go and buy level 2 data for this afternoon. I'm waiting for Jigsaw to get back to me, but they don't open till America, which is annoying. So I'm not quite sure where to get my level 2 from. I might go and set up an Apex account because they've got an 80% deal on at the moment and use them for level 2 data because it's cheaper. So well, just $10. I don't know why I haven't bothered about it. But so yeah, I will try and get that up and running for this afternoon. And we'll try and do a little bit of futures maybe this afternoon along with the FX stuff. And I will try out that new futures firm, see how we get on. All right. So I'll be back at 7:50 tomorrow morning, same time for the Frankfurt session. I'll be back this afternoon at 2:20 for the New York session. We'll have a look at how the market's gone today. Do a little bit of scalping, watch the opening range breakout on the NASDAQ and the Dow. Yeah, and hopefully bag a bit of cash. All right. So have a good morning. I'll be in the Telegram group if you need me. Go to the website, do the course and all that sort of stuff if you want to. If you don't, fine. Go watch the rest of the stuff on YouTube. Yeah, I'll be back this afternoon. Hopefully we'll make some cash. All right, guys. I will see you later.